Okay, today's video is on Cornerstone and how I'm up about $17,000 for the day. Is this bounce back in Cornerstone for real? Well, let's take a look at the overall markets, the S&P 500 and the Nasdaq, and see what's going on with Cornerstone, because Cornerstone is tied to the indexes, as you know. We earn over $100,000 per year in dividends at this channel, and our performance and value shows that we're up 33% for the year. Now, this number is going to change after today's performance, because every 4,000 to 5,000 I go up in my account, that's about 1% of performance in my brokerage account. So up 16, that's about 4%. So tomorrow you'll see me updated at about 37%. We're up in the portfolio. The SP is up 14, the Dow's up 4, and the Nasdaq's up 27%. So what the heck is going on with Cornerstone? I think that it's something that it's tied to the recent dip that Cornerstone had. It was probably unjustified. We fell too far too fast, and now we're seeing the snapback. But maybe it's something to do with the overall market too. So again, let's go check those charts. If you need help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. I have e-guides on how to properly play Cornerstone, and I have e-guides on how to use margin to live financially free out of your brokerage account. So for every $1 you put in your account, you get $4 of purchasing power. I just use a fraction of this margin to buy more Cornerstone. Well, actually, my whole portfolio, as you can see, 456, it's basically Cornerstone itself, okay? And then I use my margin here at the bottom, as you can see in this bottom red number, 240 grand, to diversify around Cornerstone with other funds such as yield max funds, bonds here. Earlier today we bought Clip today. So we diversify around Cornerstone. Cornerstone's my largest holding, or the cornerstone of my account, if you will, of my portfolio. And that's because it's a 4-star fund. Here you can see it's actually 5-star Morningstar. It fluctuates between 4 and 5 stars, and it beat the indexes, as you can see here. Cornerstone's also special because it pays a dividend of 21%, okay, and it drips the dividend down at the NAV. So here's the market price of $8, and it drips the dividends down here at the NAV. So you see 685, that's a 17% gain. 627, 28% gain. 633, 27% gain. So Cornerstone is one of the best vehicles I've ever come across to amass my wealth in. It tracks the indexes, and it pays you a 21% dividend. So this is how I can afford to put most of my account in this position and sleep at night still. Okay, and the other reason why I have so much Cornerstone is because it's 30% maintenance. And as you know, living financially free out of my brokerage account, I need to follow the lowest maintenance names possible. So here we go, 30% maintenance, all right, 30%. That means that for every $100,000 I put into Cornerstone, only $30,000 of my equity is taken up. And that's the key to living financially free. If you need help understanding maintenance and the power of equity, which low maintenance names unlock more equity out of your account, email me for my margin e-guides at akintodd48@gmail.com. See, I have a market value here of 456, but the equity number here of 180 is what's most important. When this gets to 0, I'm in a margin call, so I'm well away from a margin call because I only use just a fraction of my purchasing power to get this extra income in Cornerstone. And also, I spend out of my E-Trade account. I tie my bills to this account. I travel the world. I can buy anything with my E-Trade debit and checking card, and it comes out of this available for withdrawal number. So we always want to keep this number high. Even when you're not using margin, you still want to keep your available for withdrawal high. You want to buy low maintenance names, okay? Cornerstone is low maintenance. Some of these yield max funds are high maintenance, okay? So if you're putting all your money in these other high maintenance names with or without margin, this is taking up your equity, and you can't live as freely out of your account as you would like to. So that's why I put so much in Cornerstone. Okay, but you have to learn how to play Cornerstone. You have to time it around its rights offering, and you have to ask for that special drip. When you time it around its rights offering, you come out way ahead, because you're supposed to understand that Cornerstone averages a 30% premium to NAV every year. And if you sell out before the rights offering, you can pocket the 30% premiums plus the 21% dividend. When the rights offering is announced, I announce it here on the Discord chat room and the RO channel. We also have other channels here, such as who has the best drip programs, Cornerstone drip channel here, drip Cornerstone, because not every broker carries the special drip and Cornerstone. And we also have many other channels here. We have hundreds of members in the chat room, all of whom have different brokerage accounts and can share with you their experiences on what they did for their drips in Cornerstone, or how they negotiated their margin rates down in their brokerages. So Cornerstone now. And by the way, when you buy my e-guides, you get free access to all those Discord channels, plus you get my phone number to call me anytime you need me, okay? So Cornerstone, let's see if the index itself is bottoming, okay? So again, we're up 2.45% today, and the indexes are only up 1%. Okay, the SP is only up 0.5%. So yes, I see the Nasdaq's at 1.3, and that probably has something to do with this rally. But I think, again, Cornerstone just fell too far too fast. Let's go look at a chart of SPY first. And as we go in here, I think you'll see that SPY is bouncing off of a significant moving average, okay? We've been tracking this. We've been paying very close attention. The S&P blew through the 50-day moving average, okay, that blue line, okay, 50-day moving average, and blew through it. But now we're resting on this purple line and bouncing off of it, which is the 100-day moving average. So we're seeing, this is the index, this is the S&P. We're coming off oversold levels almost in the RSI. So let's go compare this now to Cornerstone, because Cornerstone tracks the S&P. So we hit go on Cornerstone, and we're here now on the charts, and you can see that we're trying to get back above that purple line as well, that 100-day moving average. So it looks very close to the S&P, doesn't it? Yes, it had a violent shakeout here. I think that people were spooked, and that happens in Cornerstone every once in a while. And you know, it also tracks Apple. Apple's one of the largest holdings of it, and if you go look at a chart of Apple, you'll see that it blew through most of its moving averages. And so today Apple's bouncing some, and you know, see how Apple blew through that purple line. I think that's what, you know, added to Cornerstone's drop recently. Either way, Apple's a large part of the indexes, right? So it's a large part of Cornerstone. So when the indexes fall, when Apple falls, Cornerstone will fall. But we're seeing that bounce back in Cornerstone now. So hopefully these gains can hold for the day, but I'm not worried about gains. Once again, all I care about is that Cornerstone and the rest of our index investments are tracking the indexes, okay? That's the key to my performance in my account, okay? I tie all my investments to the indexes. I use a little bit of margin to get extra performance and extra income, and then I I make sure to not only tie all my investments to the indexes, but I get such high yielding dividend paying assets, 20% dividend here in Cornerstone, that even if the market falls 20%, I break even for the year. So it's really it's not a fear of mine to be in margin, because the interest on my margin is so low. Okay, this margin interest, it's lower than a credit card, lower than a mortgage rate. So, you know, I'm getting charged around 6% interest. So, and you can negotiate that down if you want. And then if you have 100,000 in dividends, then this debt is paid off in less than a couple of years, because I earn you know, well over 100K in dividends, and then my account will be plus 200,000 in 2 years, and my debt will be gone. So, and then I'll be left with all these dividend paying assets to myself, paying me monthly cash flow for life, which qualifies as income to the banks. This is how you level up your account faster. You can get more loans. So this is how I live financially free out of my brokerage account. It's how I get a housing loan, a car loan. I use my dividends to qualify for these loans, and also the dividends pay back my margin. And then when my margin gets paid back, guess what? I add more debt again, because this is a free country. The debt doesn't show up on a credit check. It just takes a click of a mouse. I just make sure it's low maintenance debt, so I have high equity. And then I grow my income always in the process when I keep adding to my debt. So if you need help, again, living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com, and you get free access to Discord, and you get my phone number to call me anytime you need. And if you have questions, leave them in the comment section below. If you like the video, click like or subscribe, and I'll talk to you soon. Thanks.